it says, through the Mexican tequila crisis, the Asian crisis, the dot-com bust, and I guess Lehman as well. Nandita, thank you very much for joining us. What are hedge funds thinking now? I mean, is it a time to cash out of commodities? Where is the money really going, smart money?
Right. Well, I mean, as you saw, the first couple of weeks of the year, the money has gone into U.S. Treasuries. So we've seen the impact of that globally. So it's been a risk-off kind of scenario thus far. But I think that the concerns that the market has had are basically twofold. One are the deflationary forces that have taken hold of the world. And second, is there a crisis of growth? Now, I think that everything is not as black and white bad as it appears to be. We saw the China GDP growth numbers today. They weren't bad at all, nothing to scoff. And I also believe that the US economy is in much better shape than what people are fearing. If you look at the U.S. consumer, it continues to be strong. The U.S. auto sector continues to be strong. Housing is strong. And commercial construction is strong. So there are large parts of the U.S. economy that continue to do very well. And I think we need to take some solace in that. As far as India is concerned, we are facing, again, twin forces of deflation, as well as some growth, pockets of growth, government spending, which isn't quite what it should be, but it's there, interest rates, which are higher than where they should be. And so investors are asking themselves, why we're not having a more stimulative kind of policy measures. And I think that's what they're looking for, both on the fiscal as well as the monetary side.
Okay. Nandita, hi, good morning and Happy New Year. I was going through some of your products and you have Karma Star, which is the long-short India equity strategy. Tell us about the changes that you've made to that particular product in the last, say, 3 to 4 months. Have you increased short allocations, and if yes, to which sectors?
Right. So I won't be able to talk very specifically, but we are running a more lower net exposure and a lower gross exposure than normal. And I think we have to sort of take into account this period of volatility that we're going through. Having said that, we're probably due for a snapback rally, which is quite tradable. So, don't hold me to any exposure levels that I might have had in the past couple of months. But I would like to say a couple of things that I think that the market has not taken cognizance of. And that is that we really have a very different scenario in India than what we've had in the past 20 years. For example, I've never seen a nominal GDP growth lower than real GDP growth. And what this means is that we need to recalibrate our expectations for earnings across the board. And we need to and analysts will be the last to do that, unfortunately, but we really need to do that. We've seen already some of the impact from the results season, the FMCG companies like Hindustan Unilever, which are having to pass on the lower commodity prices by lowering their price levels onto the consumer. And what this is saying is that we're in a different world, and so don't expect the same kind of double-digit earnings growth from these kind of places where investors have hidden or made, in fact, considerable sums of money in the past 7 years. I would argue that it's time that this changes, and that not only are we looking at a lower earnings growth cycle for this sector, but also possibly a derating.
Okay, okay, derating in FMCG. What would be the sectors that you would like in that case?
Yeah. So, there are a lot of good news out there in the economy. When I look at, again, if you look at the earnings season so far, the media company, Z, has done extremely well. Advertising growth is, 28% on the broadcasting side. Where's the buoyancy? A lot of the buoyancy is coming from e-commerce. A lot of the buoyancy is coming from digital India, startups. And I think that the broadcasters might be a really good way to, and in fact, the media sector might be a really good way to participate in that growth. So I would, focus more in that area on the broadcast side, as well as if you look at the, this decimation of valuations that has taken place. Again, within this sector, you'll see that you can buy the entire cable industry in India for $1 billion, which is about 1/3 the value of Oprah. But, this is not sustainable, right? So this industry, if Digital India has to happen, broadband has to be built out, this industry needs huge amounts of money. It's going through has gone through a tough time and is now set to enter a new level of growth. So these are, some of the areas that I'm interested in.
All right, Nandita Parker, we are out of time. Thank you very much for joining us with stocks that you're interested in and stocks where you think valuations will see a de-rating. Would you want to make any disclosures? You spoke about Z and I think you spoke about Hindustan Unilever.
Well, we are long Z and we don't have a position in Unilever.
All right, thanks a lot for joining us with your perspective on the Indian macros as well. We leave the markets as we wind down on Bazaar in a pretty dilemma kind of a stage where the big caps are